What's good, everybody? In this video, we're going over our advanced smart money concept strategy that I wish I knew earlier. My name is Wendell, but I go by the alias Spektrades. I am a full-time day trader and have been in the financial markets for half a decade. I specialize in ICT smart money concepts. My goal is to simplify smart money concepts and help you shorten your path to success. If you want to stay up to date with me, make sure to check out my Instagram at Spektrades. I have been a mentor to over 1,000+ students, and if you want to join me for daily trading plus private lessons, you can just click the link in my bio, find all the links. You know, my Instagram, I post reels and I just post daily markups to keep you updated and always keep you refreshed. Without further ado, let's get into it. Before we get on the charts, we'll be going over our SMC strategy entry model criteria and our rules. So the first one is for price to tap into a higher time frame zone, a type of order block, a type of fair value gap, or a type of key level. So right here, I have marked up these two schematics right here. As you can see, I have a higher time frame schematic and a lower time frame entry schematic. We'll be going over both of them, right? And how we're going to use them on the schematics and how we're going to execute it on the live charts also, right? So that's for number one. So as you can see here, for the higher time frame schematic, for number two, price forms a change of character or a flip pattern. So as you can see on the higher time frames, we're looking for price to give us a change of character, to give us a liquidity sweep, and a breakup structure of an old low right here, right? This is what we call a flip pattern. As you can see, price will come back into it, use the low, right, to push price lower. Boom. But for us, we're going to be using a more confirmed type of approach for this video, but this is what we'll be looking for, right? For price to form a change of character or a flip pattern. So we're looking for price to take liquidity from an old high and to give us a breakup structure of the old low on the higher time frame. So for our higher time frames, that may be the 4 hour, the 1 hour, the 30 minutes, and the 15 minutes. This is where we're going to be looking for our higher time frame zone, right? In our higher time frame model, right? We're looking for the same model but on the higher time frame. So we're looking for a change of character or a flip pattern to occur on the 4 hour, the 1 hour, the 30 minutes, and the 15 minutes. And then for our lower time frame entry, we're going to be scaling down to the 5 minutes, the 3 minutes, and the 1 minute to execute this strategy right here. So that's for number one and number two. And then for number three, we're looking for price to give us a firm body breakup structure, right? So as you can see, after price gives us the liquidity sweep of our old high, right, or a old low in a buy format, as you can see here. In a buy format, we're looking for a old low to get purged. In a sell format, we're looking for an old high. After price gives us this liquidity sweep, we're looking for a firm body breakup structure, right? As you can see here, firm body breakup structures, right? Just like here, a firm body breakup structure and a firm body breakup structure to break out the range, right? So that's for number three. We're looking for price to give us a liquidity sweep and a firm body breakup structure. And then for number four, we're looking for price to give us a fair value gap / a inefficiency should be present near our lower time frame point of interest. So as you can see here, right, this is our higher time frame zone right here. So we're just gonna mark out a fair value gap right here. What we're gonna be looking for, we have to be seeing if there's a fair value gap that is near this point of interest right here, or for number five, a liquidity pattern that is near it. So is there a short-term high near that liquidity, near that point of interest that's right here, or is there a fair value gap? Those are the other two confluences that we'll be looking for. Is there a fair value gap or short-term lows or short-term high liquidity patterns near it? And just like as you can see here, is there a form of liquidity, or as you can see here, this consolidation liquidity, or is there a form of fair value gap, right, that price can pull into? Just like we know that the fair value gap is the magnet of the markets. So the fair value gap is just gonna pull price to it, right? Pull price to it, rebalance to push price higher. So that's the other two confluences, right? So for us to see if there's a fair value gap present, or is there liquidity patterns present? So for our liquidity patterns, also it could be like this, also double top, right? Is there a double top, right? Equal highs, relative equal highs, I would say relative equal highs present, or a triple top also. Price usually comes back, give us a retest to then go lower, and then price is just building up liquidity, come and take all these highs. Is there like triple tops or short-term lows also, right, near our setup? And you guys can also watch the liquidity pattern video also that I released. I go over all the points of liquidity also, so in that video, so make sure you guys check that one out. But that's kind of it right here for the schematics, as you can see, for the higher time frames. And then after we find our zone, say we have find our zone right here, this is our fair value gap. We have a lower time frame zone, right, a higher time frame zone right here. And now what we're gonna be looking for, we'll scale down to the 5 minutes, the 3 minutes, the 1 minute to execute this strategy. And that on the lower time frames is going to show us another type of pattern right here. And now on the lower time frame pattern, it may look like this. It may look like on the 1 minute, once price taps into our point of interest. So as you can see here, right, this is price tapping into our higher time frame point of interest. When we scale down to the lower time frames, it may look like this: a liquidity sweep and a breakup structure. And now price may just be building up liquidity on the lower time frames, a small 1 minute consolidation, and then price purge through it. This could be one entry, and then your stop loss is at these lows. Now this is a confirmed entry right here, and all of this right here is playing inside of this range, right? Now, as soon as price taps into this range right here, then you scale down to the lower time frames, the 5 minutes, the 3 minutes, or the 1 minute, to find this right here, right? For me personally, it all depends, right? So if I'm trading the 15 minutes, right, I'm gonna scale all the way down to the 1 minute, right? If I'm trading now 30 minutes, I'll say the 5 minutes is like the 5 to 3 minutes is good for me. The higher the time frames, the higher your lower time frame is. So my 4-hour lower time frame is actually 15 minutes, right? So if I'm trading the 4-hour, the 1 hour, the 30 minutes, my last time frame that I usually execute on is the 15 minutes, right? And if I trade the 15 minutes, my last time frames is usually the 1 minute. So you can just keep that one in mind. Then you just execute right here. Place your entry, your stop loss right at the low. Where you're targeting old highs, right? You're just gonna be targeting old highs, like old highs on the left of us that failed to push price lower. As you can see, you're just gonna be targeting old highs. That's just perfectly right here. So this is just gonna be how price is gonna look, right? This form right here, this pattern form, is how it's probably gonna look once price taps into our higher time frame point of interest, right? So it's gonna give us a higher time frame point of interest, and then it's gonna give us a lower time frame entry model, and then we enter on that entry model on the lower time frames for us to get that sniper entry and that proper entry. So as you can see here, it's gonna be the same exact thing. Like say you have a order block right here. So you have an order block right here. As you can see, price is just gonna attract into that order block, taps into it, and then we're gonna scale down to the lower time frames, the 5 minutes, the 3 minutes, or the 1 minute. Then all we're gonna be looking for is a liquidity sweep, the same exact pattern. The liquidity sweep is kind of horrible, and a breakup structure, right, of the low that did the liquidity sweep. Then we're just gonna wait for price to pull back into a zone, right? As you can see, there's a short-term high liquidity right above here, so we're just gonna wait for price to pull back above it, clear those internal range liquidities, taps into our point of interest, to now push price lower, right? So this is where we're gonna be taking our snapper entry. Right here is like a risk entry, right? A risk entry, you don't know price is gonna keep pushing higher, right? On this higher time frame point of interest, you don't know this price is gonna keep pushing higher, but yeah, down to the lower time frames, right? This is where you're gonna scale down to the lower time frames. You're gonna see these sniper entries right here. Boom, once price taps into your point of interest. So now let's go on the charts and execute this in action. As you can see here, we're looking at gold on the 15-minute time frames. So as you can see, we have our short-term high present, and we have a liquidity present right next to a fair value gap present. And we also have a fair value gap present right near our point of interest. So we're just gonna label this fair value gap. Perfect, right? The two confluences that we were looking for. Now let's scale down to the lower time frames. Now let's play price and see when price taps into our point of interest. As you can see, price taps into our point of interest. We're just gonna box this out, and then we're gonna scale down to the lower time frames to execute this strategy. What we're looking for price to take out an old high right here, and price did that. This was our inducement high on the 15 minutes, just like we're seeing, and we're looking for price to come into this 15-minute order block, as you can see. So price came back in. What else do we look for? We're looking for price to come back and give us a breakup structure of the low that push price higher to give us the high. So boom, price gave us a, what exactly are we targeting? We're gonna be targeting our order block. We're gonna place our stop loss right above the old high. Boom. Let's come up here where our stop loss goes, right above the old high, just to be safe, right? Because our entry is already super mitigated, right? We're already on the lower time frames. We have a precise entry, and our stop loss is right above the old high. Now we're getting this confirmation entry. We're going to be targeting right here. Boom, for a quick 1, 2, 3, perfectly, right? So what we're waiting for, we're waiting for price to tap into to clear a sort of liquidity. Boom, tap into a higher time frame point of interest. This was our 15-minute order block. And then scale down to the lower time frames, look for a lower time frame breakup structure, and then draw out our zone, right? And then we're placing our stop loss above the old high just to be safe, as price usually wick out. As you can see here, price just wick out just a little bit. But if your stop loss is right above the old high, right, that's why you never place your stop loss exactly at the wicks, right? Always give them room to breathe, right? Always just because of spread and just because of just volatility, right? Always give your stop loss room to breathe. So as you can see, stop loss right above the old high, and then where we're targeting these old lows right here. Perfectly. So now let's look at some more trades on how we execute this strategy. This is our 15-minute point of interest. This is our order block right here. As you can see, right next to our order block is how we state we're looking for price to have a fair value gap, clean fair value gap, and for price to give us a breakup structure of any old highs. This is our swing high. one low, one high, and then a short-term high below it. This is our swing high. Price gave us a firm body breakup structure. So everything is in line with our rules and criteria, right? So now we're looking for price to give us a entry on here, right? We're looking for price to give us a entry inside of this order block to push price higher, right? To push price higher above this old high or this old high on the lower time frames. Clean, right? So now let's get down to the 1 minute and see it down, purge through our 15-minute point of interest, filled in our fair value gap, and what we're looking for price to give us a firm body breakup structure right here. Firm body breakup structure, and then as you can see, price rallied up and then give us another breakup structure of these old highs right here. And then as you can see, price builded internal range liquidity, just like we seen in the schematic that I shown before. Price was just building internal range liquidity, and where we're gonna enter, right? We're just gonna use this old supply zone that price purged through, right? This was supposed to hold right here. Price was supposed to come into it and hold it to push price lower, but price purged through it. So now this in turn is gonna become support now. So price is gonna reuse it, rebalance, reuse it, and then push price higher. So this is gonna be our entry on the lower time frames. We have a fair value gap right near it also. So it's following our criteria perfectly, right? Just like I stated, it has to follow the criteria. So we have a fair value gap and we have liquidity right above it, right? Liquidity right above it, and liquidity. We have liquidity in a fair value gap. Price comes back into it, and where we're targeting, we're just gonna take our trade right at these old highs right here for a good 124, as you can see perfectly. Accumulation, manipulation down to distribute, as you can see. Accumulation, manipulation down to our entry to distribute, right? This is just our core concepts, the power of 3, right? This is just our super entry models. I hope you guys enjoyed this video. I hope you guys so make sure to go on your charts and back test this and look for these for yourselves. This is it. I hope you have a great weekend. Spektrades out. If you are interested in joining my Patreon, it's patreon.com/SpecTradersHub, or the first link in the description. And right here we have the Spektrades Hub, where you can access the live trading with me every single morning on the Zoom calls. And right here we have our main scalping mastery strategy course right here that we have also. So this is it. I hope you have a great rest of your day. Spektrades out.